Welcome to HSBC Global Viewpoint, the podcast series that brings together business leaders and industry experts to explore the latest global insights, trends, and opportunities. Make sure you're subscribed to stay up to date with new episodes. Thanks for listening, and now on to today's show.
This podcast was recorded for publication on the 26th of June 2025 by HSBC Global Research. All the disclosures and disclaimers associated with it must be viewed on the link attached to your media player. And don't forget to like and subscribe to the Macro Brief wherever you get your podcasts.
Hello, I'm Piers Butler in London, and this is the Macro Brief, where we look at the issues driving financial markets across the globe. Now, here at HSBC Global Investment Research, we of course cover traditional financial assets like currencies, stocks and bonds. However, we've recently launched our own research into digital assets. So whether you're crypto curious, crypto skeptical, or you don't know your Bitcoin from your stablecoin, today's podcast is for you. I'm joined in the studio by Daragh Maher, Head of Digital Assets Research, to discuss this fast-growing area of finance and find out why we think it could go from niche to mainstream. Daragh, it's good to have you back on the podcast.
Yeah, thank you, Piers.
So, great report. I really enjoyed reading it. To get it started, can you give us some numbers to illustrate the scale that cryptocurrencies have already achieved?
Sure. Now, look, it's a funny market, right? If we look at the market cap of cryptocurrencies, right? So your Bitcoins, Ethers, stable coins, all those things you say some people don't know the A from B. That's 3.5 trillion, which is, it's a chunky number. We look at turnover in those markets in 24, there was like 18, 19 trillion dollars. And ETFs linked to Bitcoin. Again, a market that's growing very quickly, 100 billion or more. So these are all, on the face of it, big numbers until you start comparing them to traditional financial markets. And then they look kind of small, frankly. I look at currencies as well, fiat currencies. That's a 2 trillion a day turnover just in spot, right? And, I've just described cryptocurrencies as doing 18 trillion a year, right? So you look at portfolios, maybe 1% to 3% held in cryptocurrencies of a multi-asset portfolio. So small, but small and growing. And I think that's the significance here for investors.
So in terms of that growth, what's holding it back?
Well, my theory, and actually, to be honest, not unique in this, is that regulation is the problem.
Hang on, let me just interrupt you here, okay?
Yeah.
I'm a bit skeptical, and I know you said this in your report. You're going to have to convince me on that one, that regulation is the thing.
Yeah, okay.
And in fact, that you're excited about regulation.
I'm sure I will. I'm sure I'll be very convincing.
But first, can we do some jargon busting or demystifying? So Bitcoin and Ether grab all the headlines, but according to you, the real action is in stablecoins. So what are stablecoins? And forgive me, but it's not that long ago that stablecoins weren't that stable.
That is true. Like my stomach, we have had some wobbles recently. But the issue here is that stablecoins are the dominant player, right? And stablecoins, to define them, are digital money pegged to a real world asset. Now, it could be the euro, it could be gold, it could be treasuries, but almost all the time they're pegged to the US dollar. 99% of the time they're pegged to the US dollar. And essentially what they do is they give you a low volatility way of transacting in the digital asset space. They're kind of a frictionless payment method. They are absolutely the dominant player, more so than Bitcoin in terms of transacting in digital assets. And it's interesting because you kind of think, well, they're a bit boring, and you don't have like crypto bros going on about stable coins. But for institutional investors, for corporates wondering about, how do we move money about the globe on these digital pay rails, it's really stable coins that's the dominant part of the conversation.
But what's the point of stable coins? I mean, after all, we've all now got apps that we pay without using actual credit cards and what have you. That seems pretty frictionless to me. Why do we have stable coins? What's the need for that relative, say, to the dollar?
Yeah, look, you can hold cash, right? Perhaps if you and I went to a British pub, right? I'm having a pint, you're having a glass of expensive wine. And I could just tap my card on the machine, and you're done, right? Or I could hand over, what you buying wine, it'll be a £30 or £40 I'll have to hand over. And that takes time, right? The barman takes it away, he comes back with your change, he tuts at you, and the person behind you in the queue tuts at you. So that's not a frictionless way of paying. And in the digital asset space, you can, of course, bring your fiat currency, translate it into a digital asset, but it's a bit more cumbersome. If you're operating through stable coins and frankly through any other digital currency, so Bitcoin through Ether, that becomes a frictionless transaction. And if you're staying within the digital asset space, of course, then you really want to have that opportunity to remain in digital currencies. And stablecoins are those, but without the volatility, the price volatility of Bitcoin and Ether and some of the other non-pegged digital currencies.
Now, I'm going to prove to you that I read the whole report because
Okay.
at the end of the report, there's a little section that talks about the good, the bad, and the ugly about stablecoins. So maybe
All right.
illustrate that.
So look, my earlier theory that it was only my wife who read to the very end. It was clearly you was that one hit. Yeah, look, there is the good, the bad, and the ugly. I mean, I think I've explained perhaps some of the good in the context of low volatility and frictionless payments. The bad is that in a way that these stablecoins are not without their risks, right? You run the credit risk of whichever institution has launched the stablecoin. Do they hold enough reserves such that if you want to change your stablecoin back to a US dollar, they've got the dollars ready for you? Does the institution itself that issues them, are they going to remain solvent? Or where they're holding the reserves, does that institution remain solvent? So you've got that counterparty risk as well. So these are some of the things you have to be mindful of. And I should add here that you would not face with a central bank digital currency, which of course is something we don't really go into in a great deal of detail in this report, but we have done in the past. You don't run that kind of risk with CBDCs. So that's the bad. The ugly is crime. Right. The problem with being fashionable for good transactions is you also become fashionable for illicit transactions. And Bitcoin used to be the dominant player there as recently as 2020. But in 2024, it's stablecoins that were the dominant player in illicit activity in digital assets. So that is a point of concern, obviously, and if you like, the ugly aspect of stablecoins.
So can I ask a really basic question here? Probably reveals my ignorance about digital assets, but if it's all on the blockchain, aren't all these criminal transactions traceable?
Yeah, the key there is you said the word transactions, right? The transactions are traceable. Who's doing them? Less so. And I guess for most of the kind of the tracing of crime, what you're looking at is the on-ramp into the digital world and the off-ramp from the digital world to try and track identities and link identities to those transactions. Then, of course, even if you spot the person, they may not be in your jurisdiction, right? And then, so there are complications, but it is a peculiarity that I guess we thought this was entirely anonymous, which is not. It's pseudo-anonymous in that the transactions are visible to all, but you need to be kind of clever if you want to be able to track down who is the personality attached to them.
Okay, so now it's the time to get excited about regulation.
There we go.
In your report, you say that in designing a crypto capital, which is what the US is aiming to do, we should think about how an actual city is being built. So let me be provocative. Are you really saying that I should be excited about sewage?
You mean you're not? Look, I'm sure you live in a lovely house. If the sewage wasn't working, you'd move out, right?
Right.
Yeah, I think this is...
It's all about the piping, is what you're saying.
It is. And when you think about living in general, right? Of course, you like your fancy restaurants, right? You do, Piers. So, and we like our big signature buildings and all of that in the city. And I saw it expressed this way, and I really quite like the analogy. And for regulation, that is, if you like, the piping, right? It's what makes it livable. What makes you free or feel safe that your risk of being a victim of crime is minimized. And other elements that you're going to be treated fairly by the market, that won't be front running. All these kind of elements that we've become accustomed to legislating for in traditional finance, you need those guardrails as well around the digital assets. But that's a big task, right? But if you get it right, you're living in a lovely city, a lovely house, and you can flush the toilet with confidence.
I'm glad to hear that. So how, time-wise, I mean, regulation can take years to sort of fine-tune. There are a lot of different interested parties. Some people not so keen on regulation. What's your sense of how that sort of plays out?
I think we'll be done by Tuesday. I'm just not sure which Tuesday. Look, it's massively complicated. I saw a speech by the SEC, so the Securities Exchange Commission in the US, where she kind of posed questions about what needed addressing. There was 120 question marks in just that one kind of speech, right? And that's just the SEC. You got everyone else involved in the mix on crime and other elements as well. So it's massively complex, lots of people involved. That takes time, right? But it's not to say you shouldn't begin. And I think the US has stepped up the pace at which it's trying to drive regulatory reform and come up with a sensible framework. So they're to be commended for that. And I think the US is in a good position, right? I think it is in a good position. It wants to be crypto capital of the world. At least President Trump suggests the US should be crypto capital of the world. And it is pretty well placed to do that.
So who else is competing relative to the US? Is it just El Salvador who's...
Yeah. Well, they're there, right? They're the only one that have Bitcoin as a legal tender, right? Which means you have to accept it for a coffee, right? That's it. But there are other nations that I would say are further along the route of laying claim to being kind of a crypto center. I could list Singapore, United Arab Emirates. There are others out there. They're two prominent ones. The question is, will they have the scale? I mean, EU does have the scale, and they've recently introduced a comprehensive regulatory framework as well. But the US does have some unique attributes, a huge institutional investor base, a big venture capital industry, lots of tech expertise, that if you get the regulation right, you can foster innovation, foster investment, and then really you create kind of a critical mass for crypto, and I should use the word digital assets more broadly, in your economy, in your country. So yes, others are maybe a little bit further down the road than America, but the US does have some, I think, inherent advantages to play catch up.
One of the things that's got people very excited and focused on what the United States is doing is the creation of a US strategic reserve in Bitcoins. I mean, as you say, the crypto bros, I think, are particularly excited by that. Is that the equivalent of a digital Fort Knox? And are we going to have to rename the famous James Bond movie Digital Goldfinger?
doesn't quite have the same ring, does it?
It doesn't.
I think it was, well, to be honest, when it landed, the market was slightly underwhelmed. I think what they were hoping for when President Trump announced that we would be looking to having a Bitcoin reserve was that the US government would suddenly be buying a chunk more of Bitcoin. And in reality, what they did was they took Bitcoin they'd seized from criminals and more or less rebranded it as a strategic reserve. You may be aware the US has many strategic reserves. You used to have a raisin reserve, right, which I love. Right, so they have this strategic reserve, but they're not actively buying Bitcoin to fill it. Now, I think in future they may look at that. I mean, it is part of the remit to find what they call budget neutral ways to build that reserve. But even aside from that, it's significant, right? It means a big economy like the US, with the greatest respect to El Salvador, a big economy like the US is saying, hey, a Bitcoin could be a credible reserve asset. Others may disagree. I'm sure many people in the US disagree. But that was, I think, an important signaling angle that, if we talk about moving from niche to mainstream, maybe that was just another step in that direction.
So just to finish on, any sort of big milestones that you're now looking to in terms of judging the pace of change, judging the pace of regulation?
Yeah, I think one near-term one, and we should see it over the next month or so, is when President Trump's working group on digital assets comes back with its recommendations for what the approach should be to regulatory reform. There's been lots of reach out by regulators in the US, lots of discussion with the industry and with investors. So I'll be curious to see what comes of that. That is critical. But this sector is innovating so rapidly. It's going to be a challenge for regulators to keep up, right? But ever the way between poacher, and gamekeeper. So this is just a digital example.
So I think that's all we've got time for, Daragh, but well done on this fantastic initiation report. I'm sure we'll be hearing lots more on digital assets in the near future.
Thanks, Pierce, and thanks for reading the whole thing.
Yes, thank you. Daragh Maher there on the rise of digital assets. If you want to hear more about digital assets, check out the interview I did at our GIS conference in March with John O'Neill, HSBC's Group Head of Digital Assets and Currencies, and Lucy Gazmararian, founder and managing partner of Token Bay Capital. You can find this by searching for HSBC Perspectives wherever you get your podcast and also on YouTube. Remember that HSBC clients can keep up to date with our latest research by downloading our app from Apple's App Store or Google Play. And we'd love to hear from you. So if you have any questions or comments about anything we've talked about today, you can email us at askresearch@hsbc.com. And if you've enjoyed today's edition of the Macro Brief, then please like and subscribe wherever you get your podcast. That's it from us today. Thanks very much for listening, and we'll be back again next week.
Thank you for joining us at HSBC Global Viewpoint. We hope you enjoyed the discussion. Make sure you're subscribed to stay up to date with new episodes.